trust your crypto assets to centralized exchanges that actively sell your private information and front-run your trades? Would you like to buy and sell your assets without any middlemen, intermediaries, or robots? Do you like paying slippage, fees, and having the price go up as bots steal from you on low-liquidity decentralized exchanges? The solution is NodeMarket.io. Set your guaranteed buy or sell price. No middlemen, no slippage, no bots, ever. Buy or sell 1, 10, or even 10 million tokens, and you never have to worry. OTC trades are between you and the seller or buyer, guaranteed by audited smart contracts and no human middlemen. NodeMarket.io.
All right. I think we got all of our salutations in. Beep, beep. Wait, it doesn't have the rounded edges. Where are my rounded edges? Maybe it doesn't do the rounded edges on that one. Let's see. Okay, rounded edges. Good. Good. Rounded edges. Good. Woo woo. Woo woo. Hello. Hello. All right. Let's see. So you guys probably saw that kind of fun activity. Bitcoin from 65 and change up to 67.5, back down to 65 and change. A lot of people got their asses handed to them. A lot. I was talking to Brandon earlier. We were going back and forth, and it was, I think must have been an hour ago, maybe an hour and a half ago. Anyway, it was already like 1.4, closing in on 1.5 million people had been whacked. I don't know what the biggest losers were, but I bet there's a lot of them because people are stupid. So there was a lot of people shorting right around 67. I think they all got completely destroyed. So let me look at the note. Let's see. No one cares. No one cares about XRP. No one cares what those guys think about the election. Bitcoin jumps to just shy of 68K, highest since late July. Lots of people get melted. Let's see if they have any numbers. It was a lot. I bet it's as many as got melted in the jump. Oh, yeah. So, and this was a couple hours ago, so this isn't the current number, but over the past few weeks, though the race has been gradual, this morning's gains led to 127 million in shorts or bets against higher prices and longs that then bet. Every time it's the same thing. People are stupid in both directions. They're stupid on the shorts. Then when the price goes up, they go leverage long. The price comes back down. They get whacked. People are so stupid, man, which is good because that means there's money for all of us. But I mean, really stupid. Well, you can go back to Uber until the robo-taxi is here, in which case Uber's done. Do you guys want to take a guess? Let me get off of this. I don't want to I don't want to celebrate people's losses, but these people need to lose. They're so stupid. God. Anyway, let's not cast darkness. We should light a candle. So just I mean, I guess it seems to me that as Trump tends to look more likely towards victory, Bitcoin is melting in an upward direction. Anyway, that seems like my base case right now. And I think I know a lot of people are like, oh, the election's not that big of a deal. I think it is for the crypto space, at least for the near term of the crypto space. Okay. Let me cover some news tidbits. But the one little factoid I wanted to ask is, do you guys know in how many states, this goes back to the thing we were just talking about of the robotaxi. Do you know in how many states Uber is the number one employer? States in the United States, how many of those where Uber is the number one employer? 32 U.S. states, at least that's the last article that I read. 32. No, not 14, buddy. Double it and then add some. 32. 3 times 10 plus 2. 32 states. Uber is the biggest employer. What happens when they get replaced? Not all, because some will do the Uber Eats, and obviously it's less likely that, at least in the very beginning, although I'm sure that the restaurants will just run the stuff out and put it in the taxi and send it off. But for now, you would assume that if these taxis get out the door at $30K a piece, let me ask you this. For those of you that could buy a robo-taxi or 3 and put them to work, just put them out there and put them to work. And let's reduce it to 1. If you could buy 1 robo-taxi, they're going to be about 30 grand. You can buy a robo-taxi, you can put it to work, and let's say it makes you $5,000 a month. Okay? Robo-taxi, $5,000 a month. Okay? So, how many of you would do that? How many of you would take 20% monthly return on investment? I don't know if that's the number, but I would assume if you have a car driving effing full time, it's going to generate 5K. Now there's some rev share with Tesla, obviously, but think about that for a second. Well, it's safer. Those cars are safer than humans. You guys realize that, right? Like they're better at the best. The most capable you ever are as a driver is the worst case scenario for those cars. Because we don't have cameras everywhere and we don't have full attention all the time. And sometimes we're thinking of other things or playing music. None of that in these cars. So anyway, do you think people are going to invest in these vehicles? I tell you right now, I'm going to buy 2 or 3 of them and put them out there and see what happens. Why not? Oh, it's really competitive. They're only making $2,000 a month. Okay. They're $30K. You know what I'm saying? 30 grand. And so anyway, what do you think that's going to do to all of the people that work for Uber? And you might say, well, that's just part-time. Okay. But all of that income goes away for them. See you later. Bye. Gone. Poof. It's also net better for riders because it should lower the aggregate cost per ride. So I guess I would just say, and then if all those Uber drivers go away, where are all these traders going to come from? Who's going to trade Solana meme coins if these guys all go out, if they're out of work now? Because they're trading half the day and then they're driving Uber the other half, giving financial advice. So I don't know, man. Something to think about. Let's see. I'm considering starting a new company and buying 3 of these robo-taxis to run them here in the Bay Area. What are the downsides? I don't think they have it all figured out yet. I think insurance is an issue, obviously. But I would think the insurance companies would be happier to have those running around. Well, I don't know. It almost creates a new class. It would be similar to the way Uber, it's more expensive if you do rideshare by marginally. It's more expensive, your insurance, but then this is going to be safer vehicles. I'm sure Tesla is talking to insurance providers, and I'm sure that Tesla will have, hell, they might get into the insurance business. Anyway, I guess the point of all this is it's something, consider all of the immediate and then knock-on effects. The immediate effect, a bunch of Uber drivers out of work. Like in 32 states, the number one employer. Do you think that's net good or net bad for economy? Do you think that's going to look good for jobs numbers, jolts, like all this crap? Anyway, that's before the revisions. So I think that's a big deal that people aren't really factoring. On the investment side, I think for many of us, it will be great. Anyway, it's something to think about. Car detailing. Oh yeah. Well, servicing the vehicles and things like that. Tinting and PPF and all that kind of stuff. That could be cool. I mean, there's all sorts of, it's going to be very interesting to see how this rolls out. I always thought about that with a regular Tesla. I just thought they were going to roll out these features, but apparently, and also, what is that going to do? What is that going to do to the consumer sales market? Like, do you think cars, I guess in my mind, I think that let's say I had one of these, let's say I wasn't doing it for the investment. I was just doing it to have one to carry my girlfriend and stuff around. Okay, great. Shoot, off she goes. And when she's dropped off, the car then goes and makes money, picks her up when she's done, come back, goes out and makes money. Oh, I have to run an errand. I'm going to Walgreens to get screwed over on something, or I'm going to Whole Foods to have them tell me they can't ship my Amazon box. Okay, great. So I get in there and I go, it brings me back. It drops me off. It goes and makes money. The only time that sucker stops working is when it needs to charge. I feel like that might be a better kind of car ownership for a lot of people. And then I feel like the middle of car sales goes away. That middle spot. Like why on? And also it's not that expensive. Also the vehicle. So people start going like, I don't know if I want to drive. So then you would have the exotics and the sports cars be a thing because some people want to drive. And some people just don't, man. Some people just want to sit and text and do stuff like that and not pay attention and not have to pay attention. So anyway, it's a lot to think about. Anyway. There you go. Thought experiment. Displacing the number one employer in 32 states. Coming to you. Coming to a state near you. March 2025. Let me see. Which one? Singularity DAO, Cogito Fi, and Self-Key. Oh, God. What now? Is that why Crap Gito is going up? They're merging it because they're merging Cogito because it's not even a company. There's nothing to merge. It doesn't do anything. Self-Key. What the fuck is Self-Key? So stupid. These guys just make up stuff to do. We're merging licorice with chocolate and paint thinner and Brussels sprouts. That's it. That's the new merger. Who's hungry? Not me, motherfucker. Damn. That sounds disgusting. And so does that. Cogito, zero purpose, zero use utility, and no adoption. Singularity DAO. Some purpose. Not really widespread utility or adoption, but there's some utility there. That's cool. I like Singularity DAO. I don't know how they merge with Cogito, which isn't even a company, but okay. Self-Key. I don't even know how to make fun of them yet. I haven't spent enough time looking to see how I would make fun of it. So I won't. It might be amazing. Maybe Self-Key is the one like, damn, we're attaching these two trailers. I don't know whatever. And it's not even a money grab. They don't make money on these things. They go backwards. It's the same crap every time. God, these guys are so dumb. I mean, I'm sure they'll charge what they'll do. I'm sure Mario has his little fee, his little scumbag fee stuffed in there so that if the other dudes want to get out, they're stuck in the Singularity DAO token. I mean, I don't know. I haven't looked at it. I'm just going off of your thoughts, but I'm sure Brandon will peel back the layers of that ridiculous onion. Whoa. Should I do? I'm going to go to the muscle building one. I'm doing muscle building now, you guys. See? This is what you got to do. You got to do more. Do more. All right. Okay, so here's the deal. We're going to talk we're going to go macro today quite a bit. We're going to talk about, we're going to go on a longer than usual discussion. So I have to make sure that at about 8:30, we roll over to our Brainiac part of the episode, because we're going to talk about secular trends and cyclical trends and how all that propagates out. A lot of times you hear these people throwing these terms around. Sometimes, well, here's where it started. I read an article yesterday and I felt like the dude, he threw out the word secular 3 times in a sentence, in 2 sentences, 3 times 2 sentences. I thought, this dude just looked this shit up on Wikipedia or Investopedia. He has no clue what he's talking about. So he wants to sound smart. So when you want to sound smart in finance, you bring up interest rates or you say secular 3 times in 2 sentences. Arlen, she has it. So we're going to talk about that. We're going to go, we're going to look at a lot of really big macro story kind of stuff, because I think it's important as you guys build your kind of your financial base. You know, it's about understanding how all the gears in the watches turn. And a lot of times it's just understanding what people are saying. Okay, so the SDAO migration to SFI, ASI, SFI, let me guess. Singularity Financial. What is that even? It's so stupid. 1.1 to 80. 1 SDAO equals 80 SFIs. CGV migration to SFI at 1 to 10. So 1 CGV equals 10 SFIs. Key is 1 to 1. So key is the base currency. Key is the base. So does anybody know what the price of key is? I don't even know what key is. Safe key? I'll be honest, I've never heard of it. That's not surprising because it's a shenanigan with Singularity DAO, but God. Yeah, exactly, right? Beetlejuice, secular. I'm not going to say who the guy was because I actually sometimes like reading what the guy has to say. He kind of gets it, but I don't think he gets the words around it. What made him get it in the past was he didn't worry about financial terms. He just said things the way they are. But sometimes people, they put a tie on. You notice I don't wear a tie. But some people put the tie on. They're like, I need new words. I need new words right now. I need big words. I need economic words, words that economists would use. Economists like Pete Schiff. What a Schiff head. Anyway, okay. So let's get past that. We're going to talk about that. I do want to talk about also, if I can click on it. Where's my link? Come here, you. I want to talk about BTC ETF inflows. We haven't really had an inflow discussion. We didn't talk about it too much yesterday. But the Bitcoin, the word you use, secular, I don't think it means what you think it means. Yeah, that's the thing. Well, everybody here is going to understand here in a minute. They're going to get it. Howard in the house. I mean, it's always all right. I got a big ass cup of, this one's really good. This one's super good. It's chocolate and like white. It's like white chocolate and vanilla flavored coffee. Heavy on the chocolate, more heavy on the vanilla because I use vanilla cream. It's freaking good. real good. Like I took a first sip of it and I was like, whoa, yeah, that good. Anyway, yeah, I think it's more complicated than that. And if you really don't want to be a dick, Kirill, you say complex. I think it's more complex than that, because that doesn't make people feel so stupid. You know, you don't completely idiot them right then. You say, yeah, mom, I think it's more complex than that. And then you have a discussion about how the earth is actually not flat, and you go from there. All right. Yeah, when you're rich, it doesn't matter. Yeah, if you guys have any recommendations for the yummy, sweet kind of those cup things, let me know. I've just been getting the bulk one from Costco, which it's good, man. It's good. It's bulk, flavorful, and it's a multi-pack. It's got like a bunch of different things, and one of them is a question mark, and I still don't know what that is. So good. Anyway, let's talk Bitcoin ETF. So they recorded 800 million in inflows in the last 2 days. Ethereum kind of quiet, but we understand that. Fidelity dominates Bitcoin ETF inflows with 239 million, as Grayscale somehow bucks their trend of outflows. So Bitcoin ETFs saw 809 million in net inflows across the last 2 trading days. Today we'll see. Fidelity alone received 356 million worth of Bitcoin. Fidelity, what? And they were one of the first to the game. You guys remember when they hooked up? They were dating Coinbase way back in the day. You can still access your Coinbase account through Fidelity. Yes. So good on Fidelity for like stepping up to the plate years ago before everyone else. Anyway, on October 11th, net inflows totaled 253.6 million. Fidelity's FBTC, which is kind of funny, FBTC. They led the day, or they led the way with 117 million in inflows. ARC-B added 97.6. Bitwise added 38.8. Invesco added 7.9. VanEck HODL ETF contributed 14.3. Grayscale's GBTC, however, saw outflows. Anyone surprised? Is effing anyone surprised that in a 2-day period that it hoovered up almost $1 billion, that Grayscale was the one going negative? So stupid. What a company run by dumbasses. Oh God. Anyway, I was going to go into this long thing about, I watched a really cool Patrick Boyle video. My girlfriend and I watched it about because we were going to go to Red Lobster. So we watched the video about the Red Lobster bankruptcy and how that's some shenanigans. Some shrimp nanigans. Come here, kitty. Say hi. Nope. Chill there. Okay. That's that. All right. Anyway. So yeah. Grayscale S the bed while everybody else did fine. It on the next day. So this is like a 2-day split. Grayscale went the other way. So they shit the bed on the first day, but on the second day they pulled in 37.8. Therefore, and then their smaller Bitcoin ETF added 4.7 million. So at least it wasn't negative 2 days in a row for Grayscale. So at least when everyone else was going up, they only went down once of the two. So only 50% of the time are they crap every time. Anyway, the strong inflows into Bitcoin ETFs over the last 2 trading days, particularly in Fidelity, BlackRock, and ARK, suggests increasing confidence from institutional investors. Ethereum ETFs, while quieter, also saw renewed interest on October 14th, with BlackRock leading the way. Ethereum ETFs aren't going to continue to S the bed forever. Also, yesterday, Vitalik comes forward with a whole bunch of new ideas. It looks like he woke up. He's got some new ideas about making Ethereum settlement times, bringing those down, like transaction permanence. So instead of waiting a few blocks, which is about 15, mini blocks, which is about, blocks in Bitcoin kind of work differently, obviously, because proof of work versus blocks in a proof of stake consensus mechanism. Ethereum blocks, without getting into all the gory detail, transaction permanence, where it would be economically not feasible to go and rewrite the past blocks, happens at about 15 minutes. So while the transaction times are a few seconds, the transaction permanence times are about 14 to 15 minutes, depending on what's going on the network. However, the proposals that Vitalik has thought out loud about would be to reduce that, two things: to reduce the number of tokens a person has to have be a validator from 32 to 1, meaning if you have one Ethereum token, you could become a validator, which would be great because I would take my coins right off of effing Coinbase and go validate if I thought I wasn't going to get slashed or nuked. And then, because you get like twice, 2.5, twice the return, which is good if you have a significant amount of Ethereum. Or it's good if you have any amount of Ethereum, even if you have one. So that's one thing. The other thing is they would bring down that transaction permanence, that what they call termination. Termination in the movie Terminator means it kills you to prevent a bad future or a good future. Termination in transactions is a good thing. It terminates, means it finalizes. It has permanence. They're going to bring that down from about 15 minutes to 14 seconds. Or at least that's what the thought is. So that's cool. At least they're talking about this stuff. You know what I'm saying? Mm-hmm. So, yeah, great. And by the way, Red Lobster was so good. They may be in bankruptcy. That damn food is good. The lobster was amazing. The steak was not as amazing. The shrimp was amazing. Those little biscuits, amazing. And they have these kind of crunchy Brussels sprouty things. Amazing. Not trying to make anyone hungry. I know it's breakfast time. You ain't trying to go to Red Lobster right now. What about lobster flavored coffee? Hey, I'm going to merge lobster flavored coffee with lighter fluid and paint chips. Who wants in? I'm going to call it S something. You have to have an I at the end. SFI. Oh, no, not. I was going to say scam FI, scam finance. Let's call it. We could also do S because the S could be stupid. Stupid FI. DFI. It's going to be DFI. DFI. Paint chips. What did I say? Paint chips, lighter fluid, and some kind of crap flavored, lobster flavored coffee. Who wants in? Who wants in? Early investors, I'm taking now. Did you guys see that the world Wolfie, the Trump family token? I say family because everybody in his family is running something there. That token, they're trying to raise $300 million from their, okay. I went to do the accreditation crap. I get to the end of the process, and then there's a $50 charge to do accreditation. Bro, F you. How about that? How about F you? So I did not do it. I'm like, I'm not giving these dudes $50. I just gave them a copy of my Coinbase thing. I ain't giving them $50. F yourself. So I pulled out. And they raised about five and change million this morning because today was the launch of the fundraise, not of the raise, not the early token sale, not the actual token. The token is I don't know when the token launches, but they raised 5 million. The website went down. So somebody's buying. Now, if you go to LA and rent one of our cars, you can come over for coffee, but not this white chocolate vanilla one, because that's mine. Mine and mine alone. All right. Okay, let's switch gears unless there's any questions. Why don't we do this? Why don't we take a 2-minute look at the market? Okay, just a quick 2-minute gander at Los Mercados, and then we will turn to the Brainiac part of our session. We got to expand our brain boxes. Well, heavens to Betsy. Take this old banner off her. So what do we got? Okay, down 0.5%, down 0.3. So kind of quiet, kind of where the day started is where we are right now. But man, did some people get their asses handed to them. Everything's fine. Everything. You know what? That's it. It's reached the top. I'm going to short it. Shit. No, here it's really at the top. I'm shorting it. Shit. I'm going long. 67. It's a breakout. Shit. 65. It's going down. I'm going to short it. 65. This thing could go to 64. I'm going to go short. Shit. A lot of ass shits in there. A lot of people got their asses kicked. Dummies gonna dummy is what it is. Dummy's gonna dummy. Don't be a dummy. All right. What else is interesting or exciting? Aptos keeps melting up. SUI is running into a little bit of a hurdle, but some of that is because of this 400 million that they're not being clear about. So 400 million was sold during the run-up of SUI. 400 million in what looked to be early investor tokens. Now, what SUI came forward and said is no founders, no insiders, no nothing. However, these were like one of their partners, and companies do have launch partners. So I don't think this is actually BS. I think it's probably accurate. They'll have launch partners that are kind of like investors, but they're like, look, we're going to give you money, but we don't really believe in this shit. So, because you have a dumb name. It's the name of like something you yell at a pig. SUI. So since your name is stupid and your symbol is dumb, it looks like a little water drop, and we don't really know if you do what you say you do, and you're being pushed by like a bunch of scammy people like Raoul Pal and all those other douchebag scumbags that push Luna. So since all of these things are true, we're going to give you kind of a bridgey type loan, but it's going to be repayable in tokens, and our unlocks happen fast. We're not waiting 3 years to get unlocked. You're going to unlock our shit right now. And so it looks like they cashed some positions out that they probably got these tokens at 10 cents or something. So of course they cashed out. I ain't even a hater. Good for them, but it's about 400 million. And so someone got online and was like, hey, these are insider tokens. These are, these were all supposed to be locked up. And so he's like, no, these aren't ours. These weren't locked up. All of our tokens are locked up. And that'd be a big deal. If tokens, it's not like Singularity Net where tokens are locked up, but then they just claw them forward even though they're locked up. Which one would say, how can they be in two states at one time? How can they be in a state of vested and unvested or locked up in smart contract and not locked up super symmetry? Perhaps we'll never know. But anyway, so that was the worry. That probably has put a little bit of kind of psychological pressure against SUI. It also ran really far, really fast. So if you look at the last 30 days, we kind of started that trail at about $1.05, $1.07. So it did a full double in 30 days. It's going to give some of that back. I mean, it just is. You say, well, what about when it was over here at $2.12? So look at the chasm from April to now. So it pretty much got back. It just got back the chasm. And it started, obviously much cheaper. So, I'm not a hater. If people want to take some cash off the table and they legitimately can, and they're not pulling a scam, I don't have a problem with that. Anyway. And then if you're kind of looking and saying, okay, who can go further, faster? These are both on the Move blockchain. We're going to talk about the Move blockchain maybe tomorrow. I think maybe I'll put the bug in Brandon's ear to let's talk about Move a little bit. But anyway, these are both based on that. Slightly different build, but very similar. And I won't give any, obviously, investment advice because this is not that. But if I was just a dummy staring at these, I'd say, I don't know who's going to win. They both kind of smell the same to me. So maybe I just get, if I'm interested, I'd probably have kind of an equal stash of these. I don't, but that's because when I see Raoul Pal attached to anything, I'm instantly averse to it. If he even likes something, I'm averse to it. If he liked my shirt, I would fucking burn it because he's a scumbag and he's a borderline crook. And Any of those dudes that were pushing Luna and telling everyone to go deep into Luna are scumbag fucking crooks. All of them. No, because it only takes a dummy in a napkin 13 seconds to realize that thing was a fucking scam. Luna, UST. Such an obvious scam that people that don't know anything about crypto were like, oh, that's a scam. That's clearly a scam. It's not even a good scam. It's anybody that buys that's an idiot. So, yeah. Anybody that was on that super pump of Luna is a crook. Or they're stupid. And both of them are bad. Both of them will cost you a lot of money. So there you go. All right. What else is going on? Not much. It's pretty quiet. Pretty quiet. Because we had a big update yesterday. Look at Store J. What? I'm sure there's some news around that because maybe a deal, a partnership. I haven't looked up the news. I did some in and outs of this thing. I have. It's one of my data positions. I like it. I like it more today than I liked it yesterday, but I liked it yesterday too. And I liked it the month before. So it's been having a pretty good run. Hey, kitty. It's been having a pretty good run. We'll see if there's something to it. It's got a tiny market cap. And in a bull market, just about anything, like anything, can probably get about $1 billion, $1.5 billion market cap. Hi, kitty. So we'll see. This thing has calmed back down as it should after their potential spamminess. There's another situation where Igen, whatever, I think Jin, they had some tokens that were supposedly locked in smart contracts that somehow found their way to the market. And one would say, well, does that mean that you guys were lying? Does that mean your smart contracts are penetrable? Does that mean, what does that mean? Well, I guess there's a lot that could mean. And so they need to resolve that. And I don't think that they have. And I don't think it's investable. Nope. No. Down. No. Come here. Say hi. Hey, say hi. Want to say hi? Come here. Say hi. Whoa. Meow. Good girl. She just wants to be close. Good girl. She's a financial kitty. Giving me the old Heisman, huh? There it is. That's the one. And the Heisman has been awarded. Anyway, so that's kind of what I got. Yeah, everything's quiet. I'll have more information about Hypercycle tomorrow. There's announcements coming, but they have to announce them. I can't pre-announce their announcements or whatever that is. Remember, it was like, there's an announcement coming. An announcement of an announcement. I know what the announcements are, but I ain't telling. Whoop, whoop. All right. That being said, okay. Let's switch gears. We're still at basically 2.3. Oh, look, we're back to 66. Another bunch of people just probably got hoovered up in leverage. Back to Uber they go. Oh, wait, Uber's going away. Once Robotech, back to unemployed they go. Oh, wait, that means unemployment goes up. That means the government has to cut more checks. Uh-oh, we got to cut rates. Why do we got to cut rates? Oh, it has nothing to do with the economy. We can't service our own fucking debt. What do you mean? Well, if we owe X amount of money and we owe $1 trillion every 3 months, yes, go look it up. It's almost $1 trillion every 3 months. The U.S. government's going to continue debt. So with higher interest rates, Fed, we can't service our debt. No, we can't. No, we can't. So what do we do? Well, I don't know. I was talking to my buddy last night, Ben, who we get together and watch. We do dinner and cool TV once a week, and Ben and I were going back and forth. Well, not really going back and forth, just kind of spitballing. Like, can the Fed buy all the debt? Well, with funny money bank reserves, they could, but that's not real money. And so it's not really buying the debt. Could they create some weird financing operation where they absorb the debt? Yes, but it's still debt. Like, someone still owes that. You can't, at some point, money's got to come. So could they cut interest rates, race to zero, try to pump all these markets to inflate away the debt kind of? Could they print their way into prosperity? Well, it's never worked in the history of economics. But maybe, just maybe, the Federal Reserve can get it done, even though it's never happened and it's not possible. But maybe, just maybe, if you can find them. What was the thing in the A-team? Maybe, if you can find them. And if they're willing to take you can hire the A-team, if you can find them. If you text them, they're going to be like, yeah, hell yeah, we ain't got nothing to do. We live in a van. We live in a van, a red van. It's like the authorities are always trying to find them. It's not hard. They live in a black van with red stripes on it. I've never seen one in real life. Meaning if you see one, that's the A-team. Hashtag arrested. I don't think they really need it. I don't think anybody really wanted to arrest them. They were being honest. Really? Okay. There it is. We done did it. All right, let's get over to the Brainiac part. Let's talk some brain goo.
Hello. You're late.
You're bad at math, but I'm giving you an A+ in confidence.
Just doing what I gotta do.
Extra credit.
Ooh. Extra credit. Well, extra credit today is secular and cyclical. I need to put a title. I need to put a banner. Without a banner, people be like, what are we talking about? I got lost in all this. Okay. Let's get rid of that other stuff. Bam. Oh, there's a sales call. I love telling these dudes to eat shit, but I'm not going to do it. I'm not going to do it this time. I'm just going to ignore it. Although it's one of my favorite things. It's one of my favorite things in my whole life is, God. Anyway. Okay. So from now on, when you guys hear, oh, well, the secular trend and the cyclical trend, we're going to have some grasp of that, but there's some other, we need to put some color around that. So it's not enough. It's not enough just to give you definition. So I'm going to treat all of you here like economic students, not at the high school level, but at the more graduate level kind of. So thinking caps. So let's look at trends. Let's look at trend shapes, not only in financial markets, but just in society in general. Understanding trends is pretty crucial. And it's not just for economists, but also for policymakers, us, investors, money managers, businesses, anybody interacting, planning, like future planning. So we're going to delve into the nuances and differences between the basic trends, which is secular trends and cyclical trends. So by the end of this, hopefully you're going to have a clear understanding of how the trends function, how they interact with each other, and why the F doesn't matter. So this one is going to have more probably definitions and things like and kind of knock-on effects than some of our other discussions, hence why we need a little bit of extra time. So let's define what we're talking about first. There are cyclical trends. And these are short to medium term fluctuations. Think about like on a bike, right? Cyclical, cycle. These are short to medium term fluctuations in economic activity. They occur regularly over time. Business cycles, right? Cyclical trends. So these are the ups and downs associated with the business cycle. The expansions, the contractions. Oh, stop singing. Stop it. Stop right now. You stop your singing. It sings, you know, these little muscle deals. Did anybody? Yeah, it's not important. Okay. So cyclical trends are the ups and downs associated with expansions, contractions of economies, right? And economies experience these waves, these cycles pretty regularly. So think of them as the economic ebbs and flows that happen within the span of, say, a few years. Cyclical, short term, medium term at the most. On the other hand, secular trends are long-term movements that persist over decades or centuries. These trends reflect basic fundamental changes in the structure of the economy. It could be driven by technological innovations, demographic shifts, meaning population's age, average age. I know in India, the average age is 14. That's a lot different than like in Japan, where the average age is a lot. So you have different cylinders of people paying into social services and things like that. And that creates completely different outcomes and also different demands on those societies. Anyway, you have cultural changes that could occur, like the shifting of a demographic situation where younger takes over. And in that younger taking over type scenario, there's probably pretty big differences in those cultures and what that would mean for the future of that society. So secular trends set the broader direction in which an economy is heading over the long haul. Okay. So duration. Cyclical trends typically last from 1 to 10 years. 10 is like the top. They encompass the phases of the business cycle. So, which are, for all of you home gamers, if you want to write your business cycles down, it is expansion, peak, contraction, and trough. So, from your point of view, expansion, peak, right? We're going up, peak, contraction, trough. What happens is we skip the trough because people try to paper over. Every time there's a contraction, we try to paper over it with funny money and bullshit. That's problematic. That creates longer, flatter, kind of semi-depressive scenarios that can last the entire 10 years. It can last longer. Anyway, secular trends, on the other hand, span decades. So let's call it 10 plus. They represent long-term growth patterns or declines unaffected by these short-term fluctuations. So you can have this little stuff right here, but the longer trend, that long, many decade trend, that's a secular trend. So what are the causes of these? Well, cyclical trends, cyclical. Hold on. I need more of that chocolate. Cyclical trends often caused by changes in demand. So the aggregate demand and supply, think little e. Monetary and fiscal policies, right? So the short-term machinations of government entities and elected representatives, political scenarios, external shocks like oil price spikes or financial crises. Did you see that demand for oil is not so good? Anyway, that's a whole other thing. We'll get into that. Maybe that's a Thursday discussion. We probably need to talk about oil. We'll talk about that on Thursday. Anyway, back to trends. Secular trends, on the other hand, these are driven by structural factors such as technological advancements, demographic changes like an aging population, globalization, shifts in consumer behavior. So there you go. Let's talk about the predictability side. Cyclical trends, their predictability hinges so while the business cycle's existence is pretty predictable, right? The timing and magnitude of its phases are not quite so predictable. And economists will debate back and forth when a peak or a trough will occur. They're debating right now, is the US in a recession? I would say that most of the whole effing planet is in a recession. But no one admits a recession until you're halfway out of a recession, right? And yet at the same time, government entities would have you think that they're managing it. Like, how do you manage something that you don't even acknowledge until a year after it's happened? What? Next question. Yeah. So let's take a deeper dive into cyclical trends, because this is where the little e occurs, our kind of small e economics, which you guys are getting good at. So as we look at the phases of the business cycle, expansion characterized by increasing economic activity. We have rising GDP, lower unemployment, and often rising inflation, right? Because in expansion, there's competition. People are fighting over goods and services. There's more money floating around. Wages tend to hopefully outpace inflation. There's more competition for jobs. Things is good. More people buying eggs, and there's only a fixed amount of eggs. Them eggs going up, bro. Did you see the CPI? God, eggs, right? You back out eggs, nothing looks special, but eggs. Anyway, now we have, so that was the expansion. Peak. This is the zenith of an economic activity. This is the top. This is where Mark Cuban says, I'm going long. And that's when you know the S is about to hit the fan. That's peak economic activity before a downturn. So when Kramer says yes, and if you get the double top signal of Kramer and Cuban saying things are good, you've hit the top. It's time to get out. Now we have a contraction. And this is declining GDP, rising unemployment, decreasing inflationary pressures. It starts to become the bad kind of deflation. The deflation whereas prices are going down, but not for reasons that are pro-economy. And then you get to the trough. This is the lowest point of economic activity before any kind of recovery can start. And this is important because this is where bad businesses get cleaned out. This is where bad behavior gets punished. We unfortunately don't allow that to happen anymore. We try to paper that shit over, and then we have perpetual recession, perpetual kind of quiet, what do they call it? Quiet, the silent depression for like a decade. Anyway, so what are the causes of cyclical fluctuations? Demand shocks, supply shocks, policy changes. Think about that like over the last 4 or 5 years, just looking at the COVID situation and all that. Makes sense, right? Demand shocks, sudden changes in consumer and business spending. For example, a significant increase in consumer confidence, that could boost spending, right? If everybody's like, yeah, right now consumer confidence is not good. Supply shocks, unexpected events like COVID that affect populations and the cost of those populations and their output, such as natural disasters, East Coast, sudden changes in commodity prices, oil, gold, not so much gold, but oil, food commodities, things like that. Shutting the whole country down due to COVID, which whatever, you can argue whether they should have, they shouldn't have, it's a scam, it's a this, it's a that, but done, right? And so you saw that supply shock play out, and you saw people make a bunch of really bad decisions. You especially saw it in home builders. These guys saw the economy get shut down. They saw housing prices skyrocket, and they started building, knowing that it would be years before these projects were done, thinking that that was forever. So many home builders look like damn fools for having built into bad thought, built into poor. I mean, these home builders, man, they should just watch CNBC even. Like, I don't know what to tell you if you're God. Anyway, you have to realize the difference between a supply shock and an expanding economy, right? If you call those things wrong, you get a much different outcome. Little E versus Big E. And then obviously policy changes. So adjustments in monetary or fiscal policy, remember at the elected representative or the unelected representative positions. Don't you think that's funny how the Fed has all this control when it's a private institution that none of us elected? Would anybody here have voted for the people anyway. So when you have adjustments in monetary and fiscal policy, and just think monetary policy, that is the Fed side, bank side, that is QE, interest rate control, and other monetary measures to adjust and manage an economy in real time. Fiscal is taxing, basically taxing government spending, subsidies, things like that, that elected representatives would put into motion, right? Build a bridge or don't, or destroy a bridge, things like that. Taxation and spending. Anyway, they stimulate or slow down economic activity. I would argue they don't effectively do either. Fiscal policies do, because that's cash on the street. Monetary policy, unless it's actual stimulus via transfer payments to people's pockets, it doesn't really do anything. It's all performance theater. But a lot of people believe it does something, and they do the behaving, thinking that the monetary policy will do the doing. And essentially, monetary policy doesn't have to do anything. If everybody believes it does something and they act accordingly, the something occurs, even though monetary policy had zero to do with it. That's happening less and less now. People are starting to call the bluff of monetary policy. It's been pretty much obviated in Japan over the last 18 QEs they've done or whatever. That's where we learned it. Bernanke didn't come up with this on his own. Anyway, like it as an example, increasing interest rates are thought to cool off an overheated economy. But what they end up doing is they propagate out into blowing up certain parts of the economy. So like, look at housing right now. It's very expensive. People are finding a hard time borrowing. And so that's creating problems. And that puts a lot of pressure on the rent side of things. Rents get hyper competitive. So you can see how all the pool balls, just from the break, how things can start the secondary and tertiary effects. Anyway, there's a lot of game theory in there. So what are the indicators of cyclical trends? GDP. You can look at GDP, look at unemployment, and look at inflation rates. So a primary indicator of economic activity is GDP. When you're looking at unemployment rates, they tend to rise during contractions because people have not as many jobs, and they fall during expansions. As things are expanding, companies are hoovering up new employees because they got to build more widgets. They got to get more widgets out there. And then inflation rates. These rates obviously, they should obviously increase during expansions due to higher demand for goods and services. And when you look at like a yield curve, it's a measure of growth and inflation expectation, right? So bond prices go down, yields go up because people aren't buying bonds. So to incentivize participation, those yields rise because people are like, why would I hide in government debt when the economy is expanding? I want to be out there making money, animal spirits. I want to be in the game, coach. So hopefully that makes sense, right? That's bond. Not that this is a bond discussion, but those things are inversely correlated, meaning the lower a bond goes, the higher the yield goes. And the other way, if the price of a bond goes up, the yield is coming down. And you can look at that, and you can look at where those yields are going. That shows you, like in a yield curve, hedging behavior of people in the money markets, what they think is coming and how they're best hedging their actual currency units in order to best profit from or insulate themselves from these cyclic changes. What are the policy responses? So governments and central banks often use their, fake monetary policies and actual fiscal policies to smooth out the business cycle, which is a huge fucking mistake. It's like you're driving a Ferrari and the low oil light comes on, and you just put some duct tape over it. What's that? That's duct tape. That's policy. We just put some policy on it. What? Why? Don't you want to fix it? No, we don't need to fix it. We just need to unplug the low oil light and everything's fine. Oh, cool. Oh, well, I guess everything's fixed then. Hell, the low gas light just came on. Give me more of that duct tape. Everything's fine. Let's go head out into the desert. Anyway, on the monetary policy side, the fakeatary policy, adjusting interest rates in an attempt to control the money supply, like lowering interest rates, is thought to stimulate borrowing and spending. It doesn't. And increasing interest rate. Now, I'm saying on the monetary policy side, obviously, if interest rates lower, like you can walk into a bank and get a lower rate on buying a house, obviously, you're more likely to buy that house. But the Fed's rates don't directly correlate to borrowing rates at banks because banks are for-profit businesses. Banks are going to do what they think. In a low interest rate environment, banks, one, they're not making a lot of money off the loans unless they're told by a government agency to do so. They just don't want to do it. They're like, why would I service this shit for free? Why am I doing this for 2 points? There's nothing to be made. I'll push this money. We'll take deposits and push them somewhere where they have a more availability. I'd rather be in commercial. I'd rather be in places where we can turn that money over. Why am I going to give someone a 30-year for 2%? Stupid. So like, you got to kind of common sense it. It doesn't matter what the Fed does. For-profit banks are going to do what's best for those banks. So do lower interest rates stimulate borrowing and spending? Not Fed rates, not central bank rates. But at the banking level, yes. Fiscal policy, government's spending and taxation, right? So increased government spending or tax cuts, that could boost economic activity, right? If they're going to build a bunch of stuff around your house and all of a sudden there's going to be tons of people employed. Well, hopefully it's not right by your house. But if tons of people are going to be employed, they're employing all these. What does the government do? What's GDP? Pay a bunch of people to dig a ditch, pay another group of people to fill it. GDP. So there you go. Taxing and spending. Is that robbing money from the future to pay for the right now? Is that printing prosperity? Absolutely. Is it a long-term way to manage an economy? Absolutely not. Does it usually lead to failure and debasement? 100%. You just got to hope you're in the debasement cycle. You're not at the end of it. Anyway, so let's talk secular now. Let's spend about 5 minutes talking secular, and then you guys will have this word soup locked. You'll have it on lockdown. Long-term factors that drive secular trends: technological innovation, demographic changes, and globalization. We kind of talked about that, but essentially, technological innovation, think breakthroughs like the internet revolution, or new industries like AI could be thought of one, going from like wood and coal to, steel and electricity, productivity and economic growth could be vastly affected by these, but it's over the long term, right? Demographic changes. So shifts such as an aging population, Japan, or urbanization can alter labor markets, changes the makeup of the labor markets, the aggregate age, things like that. Consumption patterns and economic structures, right? Globalization or deglobalization. So this is the increasing interconnectedness of economies, which influences trade patterns, currency hegemony, investment flows, cultural exchanges, diversity, things like that. So globalization matters. Also, if a bunch of countries start essing the bed and we're all connected, then you have both globally synchronized growth and globally synchronized recessions. You get it? If we're all holding hands, we all fall down together. I'm sure there's some nursery rhyme in there somewhere. Anyway, structural changes in the economy. So secular trends tend to lead to significant long-term shifts in the economy structure, where let's say you're going from industrialization to a service economy. So a lot of the developed countries now have transitioned from manufacturing-based economies to service-oriented ones. Think about these agrarian societies, mostly fishing and growing stuff and watering it and taking it and putting it in little buckets and shit and selling it, like agrarian, right? And then transitioning to manufacturing based, and then transitioning to service oriented, right? Out of the fields and into the call centers until AI takes over. Ergo, automation and AI. So advancements in automation and artificial intelligence along that path to artificial general intelligence, they reshape job markets and productivity. They're doing it right now. And so you start to see these very obvious examples of secular trends, long-term trends. So the information age, right? Since the late 20th century, the rise of digital technology has transformed economies pretty aggressively and globally, right? That information age. And then think about the last 10 years in climate change awareness, right? Growing recognition of environmental issues does start to lead towards shifts in sustainable energy. Look at the vehicle markets now, where you got a ton of hybrids. Who would have thought 10 years ago that Lamborghini would have said we're going by 2020, was it 2028? No more full internal combustion engines. It'll only be versions of hybrids. Who would have thought such a thing? It's madness. Madness, I say. Anyway, so understanding how secular and cyclical trends interact is pretty crucial. And essentially, secular trends influence cycles, meaning long-term trends can set the stage for short-term cyclical fluctuations. For example, a secular decline, meaning long-term decline in interest rates over decades, could influence investment patterns or asset bubbles. It could start pushing torrents of cash in different directions for a sustained period of time. Cyclical trends affect the secular direction. So severe short-term cyclical downturns, like a financial crises, because there's many, they can have lasting impacts that alter the long-term trends, such as prolonged periods of higher unemployment, prolonged periods of inflation or debasement. Get it? So if the little vacillations, if one is really bad, it can put some damage to that long-term trend. It can change the long-term trend. Okay? You have, just think about like the Great Depression. I'll kind of leave you with this. I mean, there's a bunch of these kind of scenarios, but like, think about the cyclical aspect of the Great Depression. You have this severe economic contraction in the 1930s, for those not, so 1930s, with massive unemployment up to like 24%, 25%, and deflation, the bad kind of deflation, the kind of deflation where it's because the economy has shit the bed so bad that prices come down. That's the bad deflation. That's not the good one. That's the bad one. And so that was the cyclical part of it. The short term was the economic contraction in the 30s. What was the long term? Well, it led to significant changes in economic policies, the role of government influencing these long-term trends in regulation and social welfare. So the short term, if the damage is big, it can create long-term echoes. Does that make sense? So the short term, so you have this long-term trend, and if the short term is so damaging, it can create permanent changes to the long term. That should make sense, right? Think about like right after World War II, the cyclical, the small, was an expansion phase with a bunch of rapid economic growth and a bunch of people coming back from the war and a bunch of people entering the workforce, versus the secular trend, the establishment of the middle class and the rise of consumerism in many developed countries. Creative destruction, right? Think of the digital revolution. You have the secular trend, which is the ongoing impact of digital technology on productivity, on communication, and various economic structures. But you had the cyclical fluctuations, the dot-com boom and bust of the late 90s and the early 2000s. Pew, pew, right? And so essentially for policymakers, they look and say, okay, we can try to use monetary theater and fiscal tools to stabilize short-term fluctuations. It's kind of like, let's just stay afloat right now. We don't really care about the future. And you could argue whether that's a good or a bad strategy, but that is what they do. That they very much deal with the right now. And it's like climate stuff, like, oh, I'm cold now. I'm going to spray hairspray all over my backyard. Why? Because it destroys the ozone. It'll be warmer. Yeah, true, but it'll nuke all your kids. I don't care about my kids. I'm cold now. Hairspray in the air, right? Like, so the facatory policies, the faux policies and fiscal tools are used to make right now changes. And again, you could argue they don't have right now data, but whatever it is. Anyway, but secular planning. So implementing policies that address long-term changes like aging populations or climate change is probably a better path. We just don't do a lot of secular planning. You're starting to see now. Now, for an investor, why do we care? Well, it's easy. Timing investments to capitalize on business cycles and phases makes sense. Investing in sectors like AI that are poised for long-term growth due to these secular changes like renewable energy, technology, artificial intelligence, it just makes sense. So I hope that gives you a bit of a nuanced, kind of a more nuanced understanding of these things. Some bits of these things, they do kind of overlap a little bit, meaning like you hear the term secular stagnation, and this is a theory that suggests that an economy can experience prolonged periods of low growth due to structural factors which blur the lines between these cyclical short-term downturns and these longer-term trends. So it's a secular stagnation, right? a prolonged period of low growth, which to me sounds like a great Band-Aid to put over the fact that we're in a quiet, prolonged, depressive environment. No one wants to say that. Whew. We got through some stuff today, did we not? So there you go. I think you guys have a very firm grasp now on secular long-term, cyclical short-term. And now when these assholes word soup you, you will know what they're saying, even if they don't know what they're saying. Anyway, stay in school. Don't do drugs. Don't do anything. My poor insolvent, drunk, strung on meth, grifter-ass grandmother who doesn't have this coffee because she dead, bro. And I'm not being mean. She's awful. I actually found a church that they were worshiping Satan, but they decided to start worshiping my dead grandmother. Yeah. Crazy, right? They looked at me. They were like, oh, the son. I was like, no. Stop what you're doing. Go back to your meme coins. Anyway, we will see you tomorrow. Brandon and I will be back for fun in the sun. He says it's super hot down there, but that's cool. But anyway, it's super 75 degrees here, so I'm loving it. And we'll see you then. Oh, not too many days now. Let's see. We're the 15th. 7 days away from the twin token launch. Woo, woo. Woo, woo, woo. Hush you. Hush. Oh, okay. See you later. Bye.
If you're an accredited investor and you want in on angel, seed round or early round equity and token opportunities in the artificial intelligence and cryptocurrency space, schedule an interview at nickblacknext.com. In life, you can either be really good, really lucky, or just be first.
Where the calendar
is so much easier. Schedule a digital private client interview today at nickblacknext.com.
That's how you do it. You just go to the button where there's like a little button. And you touch the button. You schedule it. You schedule a thing. You schedule it. That's how you do it. You schedule it. Like a champ, like a pro. You schedule it.